Based on the historical data and forecast, Bitcoin has shown volatility with a recent downward trend. The RSI indicates periods of oversold and overbought conditions, while the Bollinger Bands suggest potential price fluctuations. Considering the support price of $87,200 and the forecast for the next week, a cautious strategy is warranted. We will implement a combination of RSI and Bollinger Band strategies. The primary strategy will be a contrarian approach based on the RSI. When the RSI falls below 40, indicating an oversold condition, we will enter a long position. The entry price will be $87,500. The stop loss will be set just below the support level at $87,000 to protect against further downside risk. The initial target price will be the recent resistance level of $92,900. To refine this strategy, we will incorporate the Bollinger Bands. If the price touches the lower band while the RSI is below 40, it strengthens the buy signal. If the price breaks above the upper band, we will consider taking partial profits. For example, if the price reaches $91,000, we will sell 50% of our position. We will maintain the remaining position until the initial target price of $92,900 is reached or the RSI indicates an overbought condition above 80, at which point we will exit the entire position. This combined approach balances risk and reward, capitalizing on short-term volatility while respecting the overall downward trend. Based on the historical data and forecast, Ethereum shows a downtrend. The RSI consistently dips below 50, indicating weakening momentum, and the forecast for the next week predicts further decline, reaching as low as $2,860. Considering the support price of $2,940, I recommend a short position strategy. The entry price will be $2,990, with a stop loss placed at $3,020 to limit potential losses if the price reverses. The initial target price will be $2,880, aligning with the forecast. To refine the strategy, I incorporate the Bollinger Bands. The price consistently moving towards the lower band reinforces the downtrend. If the price reaches the lower band around $2,860, I will adjust the target price to $2,820 for a more aggressive profit-taking approach. This combined RSI and Bollinger Band strategy offers a robust framework for capitalizing on the anticipated downtrend in Ethereum, with clearly defined entry, stop loss, and target prices to manage risk and maximize potential returns. Based on the historical data and forecast, BNB shows a slight downward trend, particularly evident in the recent forecast prices declining from $898 to $878. The RSI consistently fluctuating around the 50 mark suggests periods of both buying and selling pressure, but recently dipping into the oversold territory. The Bollinger Bands indicate increasing volatility, with the bands widening, suggesting potential price swings. Considering these factors, I recommend a moderately conservative strategy focusing on short-term gains with defined risk management. My strategy involves a long position entry at $883, capitalizing on the potential bounce from the recent dip and the oversold RSI reading. A stop-loss order should be placed at $876 to limit potential losses if the downward trend continues. The initial target price is set at $898, aiming for a modest profit while remaining mindful of the forecast's downward trajectory. If the price reaches $898, consider moving the stop loss to the entry price of $883 to secure profits and protect against a potential reversal. This approach balances the possibility of a short-term rebound with the overall bearish outlook, offering a calculated opportunity for gains while minimizing risk. Based on the historical data and forecast, XRP has shown a downtrend with recent fluctuations. The support price remains consistently at $1.86, while the resistance fluctuates around $1.93. The RSI has dipped below 45 for several days, indicating oversold conditions. The Bollinger Bands show that the price has been nearing the lower band, suggesting potential for a bounce. Considering these factors, I propose a moderately aggressive strategy focusing on capitalizing on short-term rebounds. We will initiate a long position at $1.89, placing a stop-loss order at $1.86 to mitigate potential losses if the downtrend continues. The target price for this trade will be $1.94, aiming to capture a reasonable profit from a potential bounce. We will use the RSI and Bollinger Bands to refine this strategy. If the RSI reaches an oversold level below 20, we will consider entering a long position. If the price touches the lower Bollinger Band, it will also be a buy signal. If the RSI reaches an overbought level above 80, we will consider exiting the position. This combined approach balances risk and reward, leveraging technical indicators to enhance decision-making and maximize returns. Based on the historical data and forecast, Solana shows a downtrend. The RSI consistently below 50 indicates weakening momentum, and the forecast price continues to decline, suggesting further downward pressure. The support price of $122 and the recent price action near $126 provide a potential entry point. We will implement a short position strategy with an entry price of $129. To mitigate risk, a stop loss will be set at $134, just above the recent resistance level. The target price will be $123, aligning with the forecasted price for the week. This strategy combines technical indicators and price forecasts to capitalize on the anticipated downward trend. To refine this strategy, we'll incorporate Bollinger Bands. The price is currently near the lower band, suggesting a potential bounce, but the overall trend remains bearish. Therefore, we'll maintain the short position. If the price reaches $126, we will adjust the stop loss to $127. The primary target remains $123. This blended approach, utilizing RSI, Bollinger Bands, and price forecasts, aims to maximize returns while minimizing risk in this volatile market. Based on the historical data and forecast, TRON shows a mixed trend with recent downward pressure. The RSI fluctuates between 48.1 and 72.2, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. The forecast predicts a continued downward trend, with prices potentially reaching $0.294. Considering these factors, I recommend a short-term contrarian strategy focusing on potential rebounds. My strategy involves entering a long position at $0.297 when the price touches the support level. The stop loss should be set at $0.295 to limit potential losses if the downward trend continues. The initial target price is $0.306, aligning with the recent resistance level. If the price reaches this target, we can consider a trailing stop loss at $0.304 to secure profits and potentially capture further upside. If the forecast proves accurate and the price continues to decline, we will exit the position at $0.294. This strategy balances risk and reward, capitalizing on potential short-term bounces while protecting against further downside. Based on the historical data and forecast, Dogecoin shows a slight downtrend with recent price volatility. The RSI consistently fluctuates around the 50 level, indicating neutral momentum. The Bollinger Bands have been contracting recently, suggesting decreasing volatility. Given this, I propose a cautious, short-term strategy focusing on potential bounce-backs from the support level. We will initiate a long position at $0.122, coinciding with the forecast price on January 30, 2026, and the lower Bollinger Band. The stop loss will be set just below the support level at $0.121 to protect against a breakdown, and the target price will be the resistance level of $0.137, aiming for a potential $15 profit. To further refine this strategy, we'll incorporate RSI signals. If the RSI dips below 30, indicating an oversold condition, we'll enter a long position at $0.123, with a stop loss at $0.121 and a target price of $0.137. Conversely, if the RSI rises above 70, suggesting an overbought condition, we'll avoid entering a long position. This combined strategy leverages both Bollinger Bands and RSI, providing a more robust approach to capitalize on short-term fluctuations while mitigating risk. The portfolio will prioritize the RSI strategy as it provides clearer entry and exit signals. Based on the historical data and forecast, Cardano shows a downtrend with fluctuating volatility. The RSI indicates that the asset is currently in a neutral zone, oscillating around 45, not strongly oversold or overbought. The Bollinger Bands show a narrowing trend, suggesting a period of consolidation before a potential breakout. Given this analysis, I propose a cautious strategy focusing on short-term price movements. We will implement a strategy based on the RSI, aiming to capitalize on brief dips and rallies. My investment strategy involves a series of short-term trades. Firstly, we will initiate a buy position at $0.353, placing a stop loss at $0.346 to limit potential losses. The target price for this trade will be $0.365, anticipating a slight bounce based on the forecast and Bollinger Bands. Secondly, if the price falls further to $0.351, we will enter a long position at $0.351 with a stop loss at $0.343 and a target price of $0.362. Finally, if the price continues to decline and reaches $0.35, we will initiate another long position at $0.35 with a stop loss at $0.342 and a target price of $0.358. This layered approach allows us to capture gains from minor upward movements while mitigating risk through strategically placed stop-loss orders. Based on the historical data and forecast, Bitcoin Cash shows a downtrend with periods of consolidation. The RSI consistently dips below 60, indicating a potential oversold condition. The Bollinger Bands show that the price is currently trending near the lower band, suggesting a possible bounce. Considering these factors, I recommend a long position strategy. We will enter a long position at $593, with a stop loss set at $588 to mitigate potential losses if the downtrend continues. The initial target price will be $598, aligning with the resistance level. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI reaches below 30, we will enter a long position at $588 with a stop loss at $583 and a target price of $593. If the price touches the lower Bollinger Band, we will enter a long position at $588 with a stop loss at $583 and a target price of $598. This combined strategy leverages multiple indicators to maximize potential returns while minimizing risk. Based on the historical data and forecast, Wrapped Beacon ETH has shown volatility with a recent downtrend. The RSI values have fluctuated, indicating periods of both overbought and oversold conditions. The forecast suggests a continuation of the downward trend, with prices potentially reaching $3,120. Considering these factors, I propose a short selling strategy with a focus on capitalizing on the predicted decline. We will enter a short position at $3,290, placing a stop-loss order at $3,350 to limit potential losses if the price reverses. The initial target price will be $3,190, aiming to capture a significant portion of the forecasted decline. To enhance the strategy, we will incorporate the Bollinger Bands. When the price approaches the upper band, it signals a potential shorting opportunity. If the price falls below the lower band, it indicates an oversold condition, which might be a good time to cover the short position or reduce the position size. The RSI values near 38.0 and 39.4 suggest an oversold condition, supporting a potential bounce. Therefore, if the price reaches $3,140, we will consider covering a portion of the short position to secure profits and manage risk. This dynamic approach combines trend analysis, technical indicators, and forecast data to maximize returns while minimizing potential losses. Based on the historical data and forecast, Pepe has been fluctuating within a narrow range, with support around $0.00000390 and resistance around $0.00000580. The RSI indicates periods of both oversold and overbought conditions, suggesting a sideways trend. The Bollinger Bands show that the price has been oscillating around the middle band, with occasional touches of the upper and lower bands. Considering the forecast for the next week, the price is expected to remain near $0.00000530 to $0.00000510. Therefore, I recommend a neutral strategy focusing on short-term fluctuations within this range. My proposed strategy is a range-bound trading approach. I will enter a long position at $0.0000510 when the price touches the lower Bollinger Band and RSI is below 40. The stop loss will be set at $0.0000390 near the support level to limit potential losses. The target price will be $0.0000540 near the upper Bollinger Band and resistance level. Conversely, I will enter a short position at $0.0000550 when the price touches the upper Bollinger Band and RSI is above 70. The stop loss will be $0.0000580 and the target price will be $0.0000510. This combined strategy aims to capitalize on short-term price movements within the established range, managing risk with clearly defined stop-loss levels. Based on the historical data and forecast, Tezos shows a slight upward trend with volatility. The RSI fluctuates between 49.6 and 67.1, indicating periods of both oversold and overbought conditions. The Bollinger Band suggests that the price is currently near the upper band, hinting at potential resistance. Considering these factors, I propose a portfolio strategy combining RSI and Bollinger Bands. We will initiate a long position when the RSI drops below 30, indicating an oversold condition, and the price touches the lower Bollinger Band. The entry price will be $0.543. A stop loss will be placed just below the lower Bollinger Band at $0.534 to limit potential losses. The target price will be set at the recent resistance level of $0.611, aiming for a significant profit. To refine the strategy, we will incorporate the forecast data. The forecast prices for the next week are relatively stable, hovering around $0.59, suggesting a continuation of the current trend. Therefore, we will adjust the strategy slightly. We will enter a long position when the RSI falls below 30 and the price touches the lower Bollinger Band. The entry price will be $0.543. The stop loss will be set at $0.534. The target price will be $0.611. This portfolio strategy combines the strengths of both indicators, providing a balanced approach to capitalize on the upward trend while managing risk effectively. Based on the historical data and forecast, IOTA shows a downtrend with periods of consolidation. The support price remains consistently at $0.0833, while the resistance fluctuates around $0.104. The RSI values have been oscillating between 36.8 and 55.9, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been contracting recently, suggesting a period of lower volatility. Considering these factors, I recommend a cautious strategy focusing on short-term opportunities. My strategy involves a combination of RSI and Bollinger Band signals. We will initiate a long position when the RSI dips below 30 near the support price of $0.0833, targeting a price of $0.096, which aligns with the center of the Bollinger Bands. The entry price will be $0.0833. To manage risk, we will set a stop-loss order at $0.079, slightly below the bottom of the Bollinger Bands. If the price reaches $0.096, we will take profit. However, if the price falls below $0.079, we will exit the position to minimize losses. This strategy aims to capitalize on potential short-term bounces while limiting downside risk. Based on the historical data and forecast, JasmyCoin shows a downtrend with recent consolidation. The RSI consistently hovers around the 40 to 60 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening, suggesting increased volatility, but the price is currently near the lower band, implying a potential bounce. The support level is $0.00734 and the resistance level is $0.00777. Considering these factors, I propose a moderately bullish strategy with a focus on short-term gains. We will initiate a long position when the RSI reaches below 45, aiming to capitalize on a potential bounce from the lower Bollinger Band and the support level. The entry price will be $0.00744. The stop loss will be set just below the support level at $0.00724 to protect against a further decline. The initial target price will be the resistance level at $0.00777. If the price reaches the resistance, we will move the stop loss to break even. If the price continues to rise, the next target price will be $0.008. This strategy combines RSI, Bollinger Bands, and support/resistance levels to maximize profit potential while minimizing risk. The portfolio will allocate 60% to this strategy, 20% to a conservative strategy focusing on the Bollinger Bands, and 20% to a trend-following strategy based on the historical price action. Based on the historical data and forecast, LayerZero exhibits a strong upward trend. The price has consistently moved above the Bollinger Band center, indicating bullish momentum. The RSI consistently above 70 suggests overbought conditions, but the upward trend remains intact. The forecast for the next week projects continued price increases, reaching $2.63. Given these factors, I recommend a long position strategy. We will enter a long position at $2.15, placing a stop loss at $2.10 to mitigate potential downside risk. The initial target price is set at $2.45, aligning with the forecast high for the week and providing a reasonable profit margin. To refine this strategy, we will incorporate RSI signals. If the RSI falls below 40, indicating an oversold condition, we will enter a long position at the prevailing price, setting a stop loss at $2 and a target price of $2.3. Conversely, if the RSI exceeds 80, suggesting an overbought condition, we will consider shorting the asset at the current price, with a stop loss at $2.4 and a target price of $2.2. The portfolio will prioritize the long position strategy, given the strong upward trend. This combined approach aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Aster shows a downtrend with periods of consolidation. The RSI consistently dips below 50, indicating a generally weak momentum. The forecast for the next week projects a continuation of this downward trend, with prices fluctuating between 0.61 and 0.637. Considering the support level at 0.574 and the recent price action, I recommend a short position strategy. We will enter a short position at $0.637, anticipating a decline. To manage risk, we will set a stop loss at $0.667, just above the upper Bollinger Band, which suggests a potential reversal. Our target price is $0.574, aligning with the established support level, which represents a significant potential profit. To refine this strategy, we will incorporate the RSI and Bollinger Bands. If the RSI falls below 30, signaling an oversold condition, we will consider exiting the short position or tightening the stop loss. Conversely, if the price touches the upper Bollinger Band, it indicates a potential upward movement, prompting us to exit the short position. The combined strategy balances the anticipated downtrend with technical indicators to optimize risk-reward ratio. The portfolio will be weighted 70% on the short position, 15% on the RSI oversold exit strategy, and 15% on the Bollinger Bands reversal strategy, for the most efficient portfolio. Based on the historical data and forecast, Dash shows a volatile trend with periods of strong upward momentum followed by corrections. The RSI indicates that the asset has been overbought several times recently, suggesting potential for a pullback. The Bollinger Bands confirm this, with the price frequently touching or exceeding the upper band, indicating overbought conditions. Considering the forecast for the next week, which predicts a relatively stable price around $67 to $70, I recommend a cautious approach focused on short-term gains. My strategy involves a combination of RSI and Bollinger Bands. We will enter a long position when the RSI falls below 30, indicating an oversold condition, and the price touches the lower Bollinger Band. Specifically, we will enter a long position at $67.4, with a stop loss placed just below the lower Bollinger Band at $65.4 to protect against further downside. The initial target price will be set at the center of the Bollinger Bands, $69.9, aiming to capitalize on a potential rebound. If the price breaks above the upper Bollinger Band, we will adjust the target price to $72.4. This strategy aims to take advantage of short-term volatility while managing risk with tight stop-loss orders. Based on the historical data and forecast, Axie Infinity demonstrates a strong uptrend, consistently breaking through resistance levels. The RSI consistently exceeds 70, indicating overbought conditions, but the price continues to rise, suggesting strong bullish momentum. The Bollinger Bands have widened, indicating increased volatility and potential for further price movement. Considering these factors, I recommend a long position strategy. We will enter a long position on January 24, 2026, at $2.58. Given the strong trend, a conservative stop loss will be placed at $2.88, just below the support level. The initial target price is set at $3.32, aligning with the forecast for January 26, 2026. To optimize returns and manage risk, we will implement a dynamic trading approach. If the price reaches the initial target of $3.32, we will move the stop loss to the entry price of $2.58, securing profits and protecting against potential reversals. We will then set a new target price at $3.52, corresponding to the forecast for January 30, 2026. This strategy combines the RSI and Bollinger Band signals with the trend analysis, providing a balanced approach to capitalize on the uptrend while mitigating downside risk. This strategy aims for high returns with careful risk management. Based on the historical data and forecast, DoubleZero demonstrates an overall upward trend, supported by the recent price increases and the projected values for the next week. The RSI fluctuates between 44.0 and 63.2, indicating periods of both neutral and slightly overbought conditions. The Bollinger Bands show that the price has been generally within the bands, with occasional touches of the upper band, suggesting potential for further upward movement. Considering these factors, I recommend a long position strategy with an entry price of $0.131. A stop-loss order should be placed at $0.126, aligning with the established support price to limit potential losses. The target price for this trade is set at $0.144, based on the forecast price for January 30, 2026. This strategy combines the upward trend, RSI readings, and Bollinger Bands analysis. If the price reaches the target, consider taking profits. If the price falls to the stop-loss level, exit the position to avoid further losses. This approach aims for a balance between maximizing potential gains and minimizing risk, aligning with a high returns investment strategy. Based on the historical data and forecast, Kaia has shown considerable volatility. The price has been fluctuating between a support of $0.0646 and a resistance of $0.0749. The RSI has been oscillating, recently crossing above 60, indicating a potential overbought condition. The Bollinger Bands show that the price is currently near the upper band, further supporting the idea of a potential pullback. Considering these factors, I recommend a contrarian strategy focusing on short-term price corrections. My proposed strategy involves entering a short position at $0.0667, anticipating a slight decline based on the overbought RSI and proximity to the upper Bollinger Band. The stop loss should be set at $0.0697, just above the upper Bollinger Band, to protect against a potential breakout. The target price for this short position is $0.0593, aligning with the recent support level and providing a reasonable profit margin. This strategy aims to capitalize on short-term price corrections while managing risk through strategic stop-loss placement.